Welcome back. And in our top business story, Dubai's residential property market has shown signs that declining values may be coming to an end, with new figures from property data company ReidIn stating that residential values were flat in the 12 months to November 2016. ReidIn reported a tiny monthly decline in prices of just 0.01% during November, echoing earlier trends of slight falls in prices during the year. Rents, though, have continued to fall, dropping 0.7% month-on-month to finish 6% lower on a yearly basis. Another index by a property consultancy, Value Strat, also broadly matched ReidIn's figures, which has not displayed any significant declines in property values throughout this year. Its index values a basket of properties in 26 freehold areas across Dubai, made up of 16 apartments and 10 villa communities. Its fourth quarter report, due to be published next month, is likely to report a decline in the index value of around 0.5% year-on-year. Several mid-market areas, however, were showing signs of a strong recovery, with valuations increasing by 2 to 3% per month. Communities witnessing upturns in value include IMPZ, International City, and Discovery Gardens, as well as Motor City, which is about 5% away from its peak in 2014. The authors of the index are also predicting a soft recovery in affordable communities such as International City, Discovery Gardens and Rimram next year, as investors chase higher returns. The Dubai Economic Council has revealed that trade between the UAE and China is expected to reach $60 billion by the end of this year, up from $54.8 billion in 2015. According to the Council's figures, the UAE is now China's second largest trading partner in the Middle East and the region's biggest market for Chinese goods. China, whose trade with the UAE stood at only $63 million in 1984, now has more than 4,200 companies operating in the UAE, as well as $8 billion in direct investments concentrated in the UAE construction and trade sectors. The UAE is viewed as a key hub along the new Silk Road, with Chinese investors increasingly viewing the Gulf state as a rewarding location to expand their business. Earlier this month, it was reported that Dubai Wholesale City has signed a memorandum of understanding with the China Commodities City Group, the world's largest exporter of goods. The agreement will facilitate mutual trade and investment activities and the exchange of expertise, with a focus on developing wholesale trade destinations and wholesale e-commerce. The Dubai Electricity and Water Authority has announced that more than 80% of the second phase of the Mohammed bin Rashid Al Maktoum solar park is complete. The solar park is the largest single-site solar park in the world based on the independent power producer model, and the second phase is the first and largest of its kind in the UAE, estimated to generate 200 megawatts of electricity by April next year. To date, 75% of the 2.2 million photovoltaic panels have been installed, according to DEWA. The project occupies 4.5 square kilometers with an investment of about 1.2 billion dirhams. DEWA is the majority shareholder of Shua Energy One, which is the company established by the authority to complete the project. It holds 51%, with Saudi Arabia's ACWA Power and the Spanish industrial group TSK taking the remaining stake. The Mohammed bin Rashid Al Maktoum Solar Park has a planned capacity of 1,000 megawatts by 2020 and 5,000 megawatts by 2030, and will receive a total investment of 50 billion dirhams. According to authorities, it will eventually save approximately 6.5 million tons per annum in emissions. And the Abu Dhabi National Oil Company will increase the price of natural gas starting Sunday, as Arabian Gulf countries forge ahead with reforms to energy subsidies aimed at lowering expenditure and narrowing fiscal deficits. The gas increase will also put pressure on industrial clients, who will need to shore up efficiencies in order to maintain healthy margins. According to a spokesperson from ADNOC, who was quoted in a local report, the price remains competitive and below market price. Prices will increase across the board starting January 1, but vary for each customer and industry. Gulf countries are among the largest consumers of energy, consuming 9.2 tons of oil equivalent per capita in 2014, which compares with a world average of 4 TOEs per capita, according to the IMF. Low gas prices have traditionally allowed Gulf industrial and petrochemical companies to prosper compared to global rivals that have had to pay international prices. The industrial sector, which includes manufacturing, mining and construction, will also have to juggle new electricity tariffs after Abu Dhabi Distribution Company last month outlined higher rates. Industrial consumers that use more than 1 megawatt of power will see a 68.75% increase to 27 fills per kilowatt hour during non-peak times, which will increase even further during peak times from June to September.